Well, greetings, test takers. This is Dean Tenney coming to you from my studio here in fabulous Las Vegas. One of our most popular content items on the YouTube channel, the best free supplement to your paid study materials, is my YouTube channel, our practice exams. A good paid supplement is the Kaplan Q-Bank. You can get a Kaplan Q-Bank for, I think it comes in on the 66 for about 60 something dollars with my 10% discount code at checkout, Guru10. For that little commercial, I also would highly recommend the quick sheets from Kaplan as well. They're nice laminated kind of overviews of the content. Before that commercial, Kaplan allows me to give you a free look on Kaplan content. And so today we'll be explicating a 66 Kaplan 66 practice final. We've already got one that I have on the channel based on debrief. We have one that Brian Lee, the Test Geek Exam Prep LLC, we've explicated that, and Brian has given us permission to do that. So this will give you three things. What I suggest you do on these is hit pause, attempt to answer, and then hit play and see how you did, and then at the end you would get a score. So, all right, an investment advisor. So that's the firm hires a third-party promoter to solicit for new customers, new clients. Which of the following records is the investment advisor required to keep? A copy of the written agreement between the parties and compensation exceeded $1,000 over a 12-month period. A receipt for any fee charged by the solicitor signed by the client. I think what they're trying to do here is get you confused about the difference between the brochure and acknowledgement of that. But that's not what this question is about. It's asking about record keeping. Copies of all the investment recommendations made by the solicitor. Well, the solicitor isn't making recommendations other than you invest with the investment advisory firm. A copy written agreement between the investment advisor and the solicitor signed by the client. Well, there's going to be not the written agreement, remember, but written acknowledgement of the brochures, a brochure for the solicitor and a brochure for the investment advisor. So that's one of the challenge on the test, RTFQ. Given this answer set A, I'm trying to blow up the screen because I know some of you might be on smartphones, so I'm trying to blow this up as much as I can so you can see it. The question, I'm also trying to read all the question and the answers because a lot of people tell me they're using the audio and just not the visuals. So I'll do best I can. 2, a client turns in a buy limit for 100 shares at 58. I'll put, if you need a little review of this, we're hoping your 7 wasn't too long ago, but I'll probably put a link next to the video description timestamps where you can find larger 15, 20-minute discussions of some of these topics like types of orders. But anyways, this is a customer who tells me he wants to buy the stock for 58 or less. There's always an implied or better, and a buy limit is placed below the market. So we know the market is somewhere above 58. Following the entry of the order, the trades occur at 59. So what we're looking is, will the limit order be triggered or filled, right? So be careful. This isn't a stop order. This is just a limit order. It's not going to be two separate events. It's only one. The customer only wants his price or better. If this were a limit buy stop limit, that would be a different deal, because in a buy stop limit, it would be, something different. So remember, as a buyer, he wants to buy it for 58 or less. Following the entry of the orders, trades occur at 59, unacceptable. 59, another trade at 59, nope. 58.80, no, we're looking for a trade below 58. 58.20, 58.40, 57.95, 57.85. So there is no trigger here. Triggers are just for stop orders. So this is kind of a Kaplan being kind of jerks and being triggered. There's no trigger. It's one event. Now, this would be a good way to miss this, would be 57.95. And if this question said, what would the customer find acceptable, that would have been okay. But, there could be people ahead of you, so we don't know if they're going to get that or not. People watching CNBC, can't tell you how many times I've had clients who are watching the tape go by on CNBC and going, oh, that's my trade. I go, no, there are other people perhaps ahead of you, right? So be careful. Be careful. That one was a tricky one, very tricky. If you were using discounted cash flow, so again, I think a lot of people get in the weeds on discounted cash flow, or what I call quantitative analysis, or what the test sometimes calls analytical methods. And most of the time when you get these kind of questions, it's not so much can you do the math, it's do you understand the inputs and the outputs of the math. So if you were using discounted cash flow method to determine the appropriate value of a security, you would want to purchase it when the trading security has just been upgraded. Well, no, discounted cash flow is taking the series of future income streams and discounting to come up with what's called the present value. So what I'm looking for is if I get the present value, I'm looking, I say, okay, the present value is, like, I'll just use a bond, for example. And using discounted cash flow, I come up with a present value of 90% or 900. What I want to do is if I saw that trading below that present value, I say, ooh, what a deal, what a deal. So I'd want the current market value equal. No, that would, if the discounted cash flow brings the present value to that number, no, that's not going to be a value. That'll be fairly valued based on the math. The current market is below. There we go. Current market price is below the present value. A client prefers mutual funds that generate capital appreciation, primarily generate capital appreciation. And the only two ways you're going to make money in any investment is income stream and or price appreciation. So if there's no income stream, the only way you're going to make money in that investment is through price appreciation, right? So this person is saying, this client is saying they're primarily interested in price appreciation than they are income stream. To companies that pay a dividend. What type of mutual fund is associated with the investment objective? Well, if they're primarily interested in capital appreciation, it looks like it would be a growth fund. You know, a growth fund, a growth in income would be total return. So given this suitability question, I think A, we'll see if I get that right. I think I'm going to go for the growth fund because it says to companies that pay a steady dividend. So they're saying they're wanting price over income as a priority. Under the Investment Advisors Act of 1940, an advisor who has custody of a client's fund. So, you know, if you have custody, you present a bigger risk to your clientele than if you're using a third party like a broker-dealer, for example, for custody. Notify a client when the client's funds are moved to another location. That is indeed true. Segregate the client's funds and keep them identified by a client. That is definitely true. Segregation is a good word and commingling is a bad word. So I need 1, 2, let's see, 3. Not move the client's funds without prior notification and specific written authority from the client. No, that's not true. So 1 and 2 is true, right? By the way, 1 and 3 kind of say different things. So you could have used a test-taking trick like saying, well, 1 is kind of substantially materially different than 3. 1 and 2. Under the Investment Advisor Act of 1940, which of the following is excluded from the definition? You know, meaning the definition doesn't encompass them. It's not about these folks. The publisher of a financial newsletter on a paid subscription basis who contains only general securities recommendations. Yeah, you know, I think of here like the Kiplinger letter, which, you know, tells you about mutual funds, certain types of mutual funds, you know, general securities recommendations. Yeah. The key point is general securities recommendation. I would prefer, and on your exam, I would prefer the phraseology general circulation, but I'll take it. I'll take 1. Persons whose investment advice relates solely to issues distributed and guaranteed by the U.S. government. Yes, that is an exclusion. A lawyer who charges a separate fee for investment advice that is pride as a separate part of the business. No, that's not incidental. That's actually somebody who's not going to have the lawyer, accountant, teacher, engineer late exception. So I think they're trying to bait us on saying the lawyer is exempt. But remember, the lawyer, it's only if it's incidental, not if they're actually in the business of providing investment advice. So I'm going to say 1 and 2. Which of the following must register as a broker-dealer under the Uniform Securities Act? Now, be careful. This is a broker-dealer and Uniform Securities Act. So we're not talking about registration here with FINRA. We're not talking about registration of the broker-dealer with the SEC. We're talking about registration of the broker-dealer with the state. So a broker-dealer with no place of business in the state that deals exclusively with broker-dealers with offices of the state. This is very testable. So the answer there is I do not need to register. So if I have no place of business in a state as a broker-dealer and I have no retail clients in the state, I don't have to register the broker-dealer. So that's A, and so A does not need to register because no place, no retail clients. B, a broker-dealer with no place of business in the state is directed offers to clients who have more than 30 days temporary residence in the state. Well, temporary residency means, they're not really residents of the other state, right? So they're saying who must register. But I think that is a retail customer, and temporary residence means they're residents. So which of the following must register as a broker-dealer? I'm going to say A does not need to. Let's see. B, I'm going to say doesn't have to because, temporary residency and they're not actually residents of the state. The 30 days is important, and then they're trying to bait on temporary residence. So let's table B. Maybe I'm not sure about B. Let's see what my other choices are. A place with no broker with no place of business state affects transactions with issuers. Again, very important. If I'm a broker dealer with no office in the state, no retail clients, I don't have to register. So A and C definitely don't need to register. D, well, this took care of our conundrum, right? A broker dealer with a place of business, full stop, period. Doesn't matter what we read after that. If you're a broker dealer with a place of business in the state, you must register in that state. So once you have a place of business in the state, very testable, broker dealer must register. So an investment advisor representative, that's you. So when I hear investment advisor representative, I think, oh, that's me, right? That's what you're going to, when you pass your test, you're going to become an investment advisor representative. An investment advisor representative set up an initial meeting with a prospective investment advisory client. An important part of the meeting is gathering client data. Absolutely. Right. I mean, I say for me to do for a really good job for you over time, I need to know a lot about you. The more I know about you, the better I'm going to be determining suitability. Of the following items, which is generally considered to be the most important for preparing suitable recommendations? Wow. These are, the three styles of questions you get on the exam are recognition, practical application, and judgment. Recognition is pretty, straightforward, like, December 31st. Right? I mean, you just know it or you don't. Practical application is pretty straightforward. Can you calculate current yield, for example? And judgment are the tough ones. And this is a judgment question, as most suitability questions are. These are where you go, oh, man, I don't know. Right? So of the following options, which is generally considered to be the most important when preparing suitable recommendations? Assets available for investments. Now, I don't really think that has to do something with, suitable recommendations. I mean, I added time horizon maybe to that. Age of the prospect. Well, that could be, again, if I'm making a suitable recommendation, it could be unique to the customer, even though there might be in the life stage, I think would be inappropriate for the investment. Who knows? I'd have to, flush that out a little more. Risk tolerance, I think would be the most important, right? How much of a beta can they sustain? Do they mind if the stock goes up and down? Right. So we need to know your risk tolerance for sure. I think that's the best answer. We'll see if we get it right or wrong. A bond offered at par has a coupon rate of, again, we're hoping that your 7 was relatively recently because, right, 66 means you have a 7 or you're going to get a 7. And I don't know if you're going to use the teeter-totter or the seesaw. I'm not sure how much of the investment side of the 66 you have to power up on. So hopefully you didn't do a 7 data dump and forget everything. It's about half of the 66 is investment. It's about half is regulatory framework. I would tell you that most of the people who struggle, it's not the investment component, it's the regulatory component. So, for what it's worth, everybody's different, however. So anyways, you should know that when you have a bond at par, all the yields are going to be the same, right? Current yield is what it pays me divided by what it costs me. And the way, I teach it, most teach it, people teach the teeter-totter or seesaw. And there's a whole separate carve-out lecture on that if you're interested on the channel. Securities issued by which of the following are exempt from registration and disclosure requirements of the Uniform Securities Act? So exemption, I think of Exempt from registration, I think of as a noun, and exempt transaction, I think, is a verb. This is about exempt from registering the security at all. And again, this is very testable. You shouldn't have been struggling. You should not have been struggling with number one, the United States and any of its territories, Puerto Rico, for example, U.S. Micronesia, the Virgin Islands. You shouldn't have been struggling with that. You shouldn't have been struggling with number two, a state or political subdivision of a state. And so we need 1 and 2. So I got a 50-50 now, shoppingly answers that. Now, test prep vendors give you a lot more, multiple questions, multiples of multiples than you get on the exam. On the exam, you get maybe 3, 4, max 5. 3, a common contract carrier. Yeah. These are transportation companies. And banks and savings institutions, indeed, 1, 2, 3, and 4. Should definitely have not been struggling with that one. The statistical method used to determine the return profile of a security or portfolio that recreates potential outcomes based on risk and return characteristics of securities is known as I told you, this is a lot of recognition kind of stuff. And so if you haven't done it, remember we said you hit pause, hit, do your answer, hit play. And I would suggest maybe having a stack of 4x6 cards next to you as you're going through this, or some notepad where you can take some notes. It's not the optimal portfolio. The optimal portfolio or set of optimal portfolios is the efficient frontier. It's not that. It's a Monte Carlo simulation. It's not a capital asset pricing model. It's not the efficient market hypothesis. Again, I in debrief haven't had anybody tell me they got a question on the Monte Carlo, but it's here. You definitely should be prepared for, again, recognizing the official market hypothesis in its strong form and have a general understanding of capital asset pricing model. Not be able to crunch it, but just do. I'll tell you what I'll do in this practice exam just to kind of prove my point. If we do encounter like quantitative analysis thing, and it looks like it's going to be a lot of higher math, I'm just going to guess BA assign it to the universe and move on. But this is called Monte Carlo by definition, so you can make a flashcard for it if you choose to. On an investment advisor, the registration usually becomes effective how many days after it is filed? So again, you don't get many aim and shoot, point and click kind of questions on the Series 66. So, anytime you get an aim and shoot, point and click kind of a test question, you want to get it. So under the Investment Advisors Act, now they're not talking about an investment advisor rep. They're talking about the firm. The advisor's registration usually becomes effective after how many days? It's 45. Again, if you have flashcards, now they were talking about an individual. I like they're trying to have 30 available to us. 30 would be noon of the 30 of the noon on the 30th day after the effective date for a natural person, a living, breathing human being walking planet Earth. This isn't asking us about a natural person investment advisor rep. It's talking about the investment advisory firm, an unnatural person, not a living, breathing human being. Of the following stocks be suitable for a conservative risk-averse investor? Okay, so I'm going to toss out the small cap because small cap, remember, is high risk, high reward. I'm going to toss out the mid cap, and then I'm going to say, okay, well, large cap companies can really make some major mistakes and still be okay. I mean, if you're, Microsoft or Amazon or somebody like that, you make a mistake. So now I got 2 large caps. Capitalization, by the way, is just the market price of the stock times the number of shares outstanding. That's called capitalization. Anyways, large cap cyclical company late in the economic cycle. No, that doesn't sound risk adverse because if it trades with the investment cycle and it says we're at the top, it looks like it's going to go down. So I'm going to go for D. Again, judgment question. Let's see if we get that right. I think we'll get that right. Which of the following actions, if performed by a registered investment advisor rep? Again, I always like to say, oh, that's me, right? That's you. And, if you're, taking the test, I like to give the cast of characters. So I always say, well, okay, investment advisor. Oh, that's my firm, right? Broker dealer. Some of you By the way, 66 means you also have a 7 and you're an agent of the broker dealer. So when you complete your 66, you'll be both an agent of the broker dealer and an investment advisor rep of the affiliated investment advisory firm. And I highly recommend, that you put yourself in the questions like this. Anyways, which of the following, if performed by an investment advisor, would not be considered inappropriate under the Uniform Securities Act? So 2 of these things are inappropriate, 1 is not, and they're asking me what's inappropriate. Recommending suitable securities for the client. No, that is something we should do. That is considered appropriate. So I can get rid of 1. If I get rid of 1, by the way, I got a 50-50, so I know 2 is going to be a problem. Lending money to a client who's your regular member of your Sunday group. By the way, even if I didn't know that, I know that 1 is suitable. I shot my answer set, so now I got to take 2. Inappropriate. Misappropriating client assets to benefit the client's securities. Yeah, that would be inappropriate. 4, without having discretionary power, determining when would be the most opportune point to sell a specific security the client has indicated he wishes to locate or wishes to liquidate. Okay, so which of the following actions, if performed by a registered investment advisor, would not be considered inappropriate? Wow. Don't you love the double negative there? Would not be considered inappropriate. So they're asking me what's appropriate. So 1 is appropriate. So Dean almost missed this because I was on the back side of the question, right? It said considered, and boy, RTFQ, read the full question. So recommending suitable clients. I need 1. So now I have a 50-50, right? I need 1. And I know that 3 is inappropriate. So by process of elimination, I know it's 1 and 4. Be careful of those double negatives. Almost trapped me on that one. Almost got me. One thing I would suggest you do is, I say RTFQ, read the full answer, but sometimes these words are important, right? This one's kind of, important. Those are the 2 words that are appropriate, not inappropriate. Which of the following investment advisory firm, which of the following activities of an investment advisory firm would not require notification and consent of the customer? Now, I always, one of the test taking tricks I always recommend, and if you watch some of my test taking tips, tricks, and memory aids in the previous legs of your testing journey, where you recall that one of the things that I recommend is projecting the correct answer. So the minute I hear require consent, I'm thinking, okay, that's the assignment of the investment advisory contract. I'm not sure that's what this will ultimately be, but that's where my mind is kind of going. Okay, so which of the one would not require notification? A minority partner resigning from the firm to start his own investment advisory firm. That is not a material fact. That's not material information. Material is the term for things that would alter your investment decision. So as an investment advisory client, we don't think you're going to be concerned if a minority partner of Fisher Investments leaves, for example. You're going to be concerned if Ken Fisher leaves, Fisher Investments, and you're going to be concerned. So let's see. That's A. Let's look at our other ones. B, an investment advisory wishing to merge with a larger national advisory firm. Yeah, that's going to be a change in control, and that is going to require notification and consent. You can't sign an investment advisory contract without the consent of the client. It's very testable. So it looks like A is the front runner so far. C, the chief operating officer of an investment advisory wishes to pledge her majority interest. And that means if the chief operating officer doesn't pay the interest and principal loan, the bank, is going to. I'm allergic to change in controls. Anyways, they're going to liquidate the securities, and that would be a change in control when they do so. So C is change in control. D, the retirement of a sole proprietor who wishes to sell. Yeah, that's a change in control. So given that answer set A, very testable, this idea of change in control and consent to assign the investment advisory contract. All the following are features of hedge funds except they generally have relatively low minimum initial investments. That is not true. Hedge funds are organized as private partnerships. And, I saw a legendary guy who was setting up his new hedge fund. And he said, my minimum investment is going to be $50 million. So that is not true. And they're asking me all the following are features So you're asking for one of these things is, okay. They are generally organized as private investment partnerships. That's indeed true. And that means they're distributed under Reg D private placements. So if you're not an accredited investor, no hedge fund for you. Typically the hedge fund investors are limited partners and the hedge fund manager is a general partner. And the entire point of setting up a hedge fund is to avoid the Investment Company Act of 1940. They're usually composed with a wide array of global investments. That could be true. They have a very broad investment chart. They can go anywhere and do anything. Yep, they frequently employ speculative strategies to maximize return. So, this idea that they have relatively it's not a feature, and that's not what they do, right? So, I would know the typical model for compensation of a hedge fund is 2 and 20, 2% of the assets under management and 20% of the profits. And the one thing they don't do is actually hedge. They actively pursue risk. The Sharpe ratio, as I mentioned, this is mainly about input or outputs. And, I always use the example of, we're having a beauty contest and, the guy gives me $1 million, he gives my competitor $1 million, and he says, whoever has the higher return wins this beauty contest and we'll get the other $1 million, they'll get the entire account. And so we tied. There's a tie, and the client says, well, I don't know what to do now. As I told you, I was looking for a winner, and you both had the same return. And I say, no. I think I'm still the winner. And he says, why? I say, because I had the higher Sharpe ratio. He goes, well, what are you saying? I'm saying I got you the same return based on taking less risk. And so it's about risk-adjusted return. As I mentioned, flashcard definitional stuff. And I would just know a higher Sharpe ratio is better, all things being equal, which they never are except on 66. In that example, the portfolio with the higher Sharpe ratio is the better portfolio because it has a better risk-adjusted return. An analyst uses the dividend growth model. So there's two versions of discounted cash flows that applies to stocks with dividends. So that's our first test point. You can't do a discounted cash flow on a stock that does not have a dividend. And you can have two assumptions that the dividend is going to grow. So you can't use the dividend growth model on a preferred stock because remember the dividend is fixed or stated, does not go up. But if it's a stock in which we expect the dividend to rise, for example, not too long ago, Bank of America's dividend was 18 cents a quarter. Now it's 22 cents a quarter. It was 21 cents a quarter. It's been going from 18 to 20 to 22. Now, if we assume that future income stream is going to be growing, the dividend, we can justify a higher price. And so here we're looking at all of appropriate stocks. So would consider all the following factors except, well, the growth of the dividend, absolutely. I mean, that's the whole point here. If there's no growth in the dividend, then we can apply this form of discounted cash flow. So discounted cash flow is applied to a stock is known as the dividend discount model or the dividend growth model. So certainly that's going to be true. The market cap. I don't think really the market cap has anything to do with this. I brought up Bank of America. I mean, that's a large cap banking stock, but I don't really think that has anything to do with doing the discounted cash flow analysis, right? I always use Warren Buffett. Warren Buffett is a big fan of discounted cash flow. He owns 1 billion shares of Bank of America. So he does the dividend growth model. He comes up with what he thinks is a reasonable price based on that, not on Bank of America's market cap. He had 700 million shares and now he has 1 billion. So I'm sure he revisits his dividend growth model, and who knows, he might even pick up some more Bank of America stock based on that. Well, no, not the current dividend, remember, because we're doing the future set of income streams. So, we definitely want to know the current dividend. That's definitely part of the math. And then if it's going to grow or not. By the way, that's my just take time. When I'm doing these explications, my channel is about long form content. I understand that. And I've been told that people can't concentrate for more than, 5 minutes. But my response is, it seems to be working, and you have a pause button. So anyways, if you want to take a break, or you're trying to figure out where you're at in terms of our journey, we're 30 minutes in. I'm going to try and bring this in at about 90 minutes, but that's what these explicated practice exams are. All right. So I'm going to choose market cap there. and then a required rate of return to make that an attractive investment, right? So the kind of Sesame Street trick here, one of these things is not like the other. The USAA, the Uniform Securities Act, anytime they say USA, by the way, I'm just going to say Uniform Securities Act, because, that just helps me kind of, get oriented in the question. And so would permit the term guaranteed. So I always joke there's two nasty words we never use in the securities industry. One of them is guaranteed and the other is approved. So now they're saying, well, Dean said you can't use that word. Under what circumstances could I use the word? So the agent, by the way, agent is you. That's you with your 7 at your broker dealer. A security that is backed by the U.S. government. I'm not sure about that. A bond that is backed by the taxing power of a governmental body. That's a municipal bond there. A bond whose interest and payments are guaranteed by someone other than the issuer. Then we can say that if we make that clear, for example, that it's the holding company. So that's true. A stock is whose dividend is guaranteed by someone. Yeah. So third-party guarantee, as long as we're clear that it's a third-party guarantee and not my broker dealer or myself that's guaranteeing it, well, then we can do that. On the Uniform Security Act, when one is referring to a security that is guaranteed, the guaranteed applies. So kind of a very similar question here as the previous question, this idea about guarantee. In general, what I would want you to know that a guarantee is something we're not supposed to say, right? So in general, you should be shying away from that term. Capital gains can be to be expected holding the specified security. Absolutely not. We're never supposed to talk about future performance. Past performance is not indicative of future performance, so we never talk about it. My crystal ball is broke. Dividends to be paid on the specified stock. Yes, we said earlier that would be okay as long as we're clear about who is guaranteeing the dividend. 3, interest and principal payment on a specified bond and deed. That was it. Reimbursing the firm, reimbursement by the firm for any losses suffered. No, that's usually, as a result of some kind of a settlement or something. So this is going to be 2 and 3. I'm not, a big fan of the last couple of questions, but, you get a draw. You got to be able to take down a draw. And you're 66. I'm wishing for you the dream draw. Everything you studied shows up. You go, man, I don't know what the big deal is. You're going to get a couple of questions on ERISA. They're very basic kind of questions on ERISA, the Employee Retirement Income Security Act. I jokingly refer to it as every ridiculous idea since Adam. And so I would be prepared for at least a couple questions. I kind of like this question. So again, maybe we don't know what 404C is, so then we have to look into the context of the question to determine this. A plan participant loans must be limited to 50% of the vested assets or $50,000, whichever is lower. I have no idea. Clueless about that. By the way, I'm not going to take it because if I'm clueless about it, I'm not going to take it. The plan must cover all full-time employees with at least 1 year of service who are 21 or older. Again, maybe I'm not sure of that. The plan fiduciary must act in accordance with the provision of the retirement plans and objectives and goals. The plan must offer at least 3 different choices. That's testable. So the D is the test question. So you should just know that. By the way, I'm a big believer in poor man's flashcards. And what I mean by poor man flashcard is you taking me up on my thing about taking notes. On some of these questions like this one, where it's just a name and shoot point and click question, you just want to get rid of the wrong answers. And maybe the night before or morning of, just read your questions and your right answers of the poor man's flashcards you've made. Poor man meaning you're not writing your own flashcards, you're using questions as fodder for flashcards. And by the way, some of those other things are true, but it's not 404C. With regard to state registered investment advisors, very important that when you're reading questions, you determine whether you're being asked about a state covered investment advisor or federally covered. It'll never be both. It's either going to be state or federal, never both. And this is asking about a state. And so that's, could be important or germane to the question. Uses Form ADV Part 2 as its brochure. That's very testable to know we use Form ADV Part 2 as a brochure. It would be correct to say It must be delivered to all new clients. It is filed through the IARD system, that's the registration depository. It must be delivered no later than 48 hours after entering the contract. Now, the 48 hours and the 5 days is about if I don't give you Form ADV before I show up. So C and D are about a particular scenario, not this scenario, about a scenario in which I have not delivered it 48 hours before I come to see you, and then I sign you up, and then you get a 5-day free look. That's not what this is about. So it is filed through the IARD, right? That 48 hours, 5 days is testable, but that's a different thing. A corporation has a bond with a coupon of 6. It's callable at 103. The bond matures in 2059. So you should definitely know that if interest rates go up, the bond price is going down. And it's not likely right now I'm going to refinance or call a bond at I'm paying 6 if I would have to pay a higher rate by refinancing. I only refinance if rates go down. So it's most likely the bond will be called. The coupon will be increased. No, the coupon never changes. The bond is selling at a discount. Absolutely. When interest rates go up, bond prices go down, right? If I have a bond that pays 6 and other bonds pay 8, somebody said, well, Dean, why would I give you par for a bond that pays 6 when brand new ones pay 8? I'll give you a discounted price. Should definitely know that inverse relationship. Again, we're hoping it's not too long since you had the 7. And that part of this exam, I'm hoping sounds familiar. Under the Uniform Securities Act, which of the following states material facts are facts that would alter an investor's decision? So I saw an investment advisor rep being interviewed, and he was asked why he didn't tell the client this information. And he said, I thought I'd lose the sale. I can't think of a worse answer. That is the all-time worst answer. All right, so which of the following statements? Restrictions A apply only to sales as to the use of material facts, not to the purchase of securities. No. The client is the final arbitrator was material. No. In our business, ours is the only business I know, by the way, where it's let the seller beware. Almost every other industry, it's let the buyer beware. But, in our industry, 33, 34, the Investment Advisor Act of 1940 says we, the sellers of the investment advisory relationship or the product, have to make sure we're doing it right. Omitting material facts is a fraudulent practice. Boy, that's a aim and shoot, point and click question for sure. Purchases of options can have a number of different objectives. One of your clients who's a soft drink fan already has a long position in KO. That's Coca-Cola, I believe. What would be possible to go long a call option? So I already have Coca-Cola and I'm bullish. I want more Coca-Cola, right? You should know that a long call is a choice to buy more Coca-Cola, right? That's what that is in English. So owning a long stock on you already own offers a hedge. No, it does not. If you want to hedge this, you need a choice to sell, not a choice to buy. It would generate additional income. No, you generate additional income by selling the option. Fix the cost of acquiring additional stock to the portfolio. Yes. By the way, this is a scenario that can come up on the test, right? So I'm talking to my client. You're the investment advisory client. You have the Coca-Cola. And I said, hey, I know you're interested in picking up some more Coca-Cola, but here's what I'm afraid of is that by the time you give me the money to buy the Coca-Cola, it could move up. So what I'd like to do is buy some Coca-Cola call contracts, and that way we'll have a fixed price. And when I get the money into your portfolio, then we can exercise those call contracts. An investment advisor is evaluating ABC stock to see if it's a good fit for a client's portfolio. Using the security market line, it is expected return of ABC when the return on the market is 20%, the 91 treasury bills yielding 4, the beta is 0.70, the inflation rate is 3. Now, as I told you, just to prove my point to you, when I get a question like this, I'm just going to guess B and assign it to the universe. And I'm just illustrating that, again, people get bogged down a lot on the quantitative analysis. And, maybe in the video description, I'll walk you through that math if you're interested. But we're also, the 2 reasons I'm doing that. One reason is I want to illustrate to you that, it's not going to be materials. So if you tell me you missed the 66 because you couldn't do quantitative analysis, I'm going to say, I had a guy recently who passed Math Geek, and he said, Dean, I don't need to memorize any formulas. Give me two. I can solve for the third, so I'm set. And he called me, he passed. He said, well, Dean, they didn't even ask me to do the math. They asked me to recognize input and output. So we'll see how we did if Guess B works. If Perfect Pasta, a privately held company in Illinois that owns 4 restaurants, wants to issue shares to public investors who are residents of Illinois. So this sounds like to me, again, projecting the correct answer. It sounds like to me that we're looking at here a Rule 147 intrastate offering of securities. And so I don't think I'm going to have to register with the SEC, but I think I'm certainly going to have to register with the administrator of Illinois. And the way I do a 147, that one's kind of funky because it's exempt under 33, safe harbor, but it's not a safe harbor or an exemption under the Uniform Securities Act. So I think I'm going to have to do qualification here. May issue shares under notice filing. No, notice filing would be for federally covered securities. New York Stock Exchange, NASDAQ, mutual fund, Reg D private placement. So that's not going to work. Must register by qualification. Yeah. Coordination, remember, would be you're making a registration with the state administrator as well as the SEC. Exempt because there's fewer than 10 restaurants. No, it's not the fewer than 10. The 10 is about a private placement. I think, again, a private placement is exempt transactions, a verb. If John Good, a properly registered investment advisor, opens his own office and hires several representatives to work for him, his business card may not read. Now, I'm not sure what this question is about, but the content is very testable about misuse of professional designations. So I'm not sure if I'm going to like the answer set here or not, but let's go through it. You can't put like CFP or RIA. You could spell out as a firm, registered investment advisor. You folks won't be able to put investment AIAR. You could spell out investment advisor rep. So there is some questions based on this. Let's see. John Good Investment Advisors, Inc. Well, I think that would make him an investment advisor. Oh, he is an investment advisor. So it says properly registered. His business cards may not read. Let's see. Good Investment Advisors, Inc. Good Associates Investment Advisors, Inc. Good Performance Advisor, Inc. I think the one here that would be misleading is Good Performance, Inc. And I don't particularly like this question, even though I told you I like the content, right? So, they're John Good looks like he's being clever here to use his last name to make it, into Good Performance Advisors. So regulators would frown on that. So I'm going to go for D, given this answer set. Under the Uniform Securities Act, agents expire. Agents, that would be you, right? That's your 7. Your registration as somebody selling investments within the state. And again, you don't get many aim and shoot, point and click questions. And so 2 years from the effective date, unless renewed, nope. Every December 31st, that's very testable. And as I said, you don't get many layups. That's a layup as it applies to, your exam. So now make sure just, I don't know if I should send out negative 5s, but remember, there's a difference between when they're asking about natural persons or unnatural persons. They're talking about securities registration. Securities registrations with the state administrator are typically a year, so from the effective date. So December 31st for not securities, 1 year from the effective date for securities. In a life settlement, the seller receives more premiums paid into the policy, but less than. You're going to get 1 or 2 insurance questions. And to be honest with you, I'm a securities professional, or was a securities professional. I'm not an insurance professional. I joke, insurance agents sell fear and stockbrokers sell greed. Be careful if you're an insurance agent that you don't rely too much on your expertise, because you're only going to get a couple questions, the face amount, right? I would, I don't know what I would do here. I would tell you that most test prep vendors, I think, go way overboard on, the life insurance component of the 66. So for what it's worth. In a trust account, the person who makes the account management decisions. So again, you're going to get a couple questions on trust. They're very basic trust questions. We have 2 practice finals. Both, by the way, the practice final that I've written that's in the playlist And the practiced final that Test Geek Exam Prep LLC is in the playlist are based on debrief. So there's nothing in there that isn't based on, well, reports. I call them questions from the front. I'm not allowed to ask you like, what was question 35, but I can say, hey, what do you think we could have done a better job preparing you on? Anyways, sometimes what I'm saying is test prep vendors have questions that aren't directly related to the exam, but you are going to get a couple. This is kind of an aim and shoot point and click question, the trustee. One of your clients is in the process of forming a new business venture with a friend. You are going to get business structure questions. Whether business structure as it applies to an investment advisory firm, or business structure questions as it applies to having a potential customer, or business structure as it applies to investment opportunities. All right, so it is considering whether to operate as a general partnership or a C Corp. Among the advantages of operating as a general partnership, ease of dissolution. Well, maybe we table that, but maybe we put 2RF. The ease of raising additional capital. C Corps are good for raising additional capital, but not partnerships. Flow through the income and losses. Yep. So that's going to be 1. So 1 and 3. I would know the disadvantage of a partnership, general partnership, is they're going to have unlimited liability. So there is a question on the exam that asks a husband and wife have a general partnership, family partnership, and they have running a business. And they ask, why would they want to perhaps dissolve the general partner and set up an LLC? And it would be because of liability. And then you should know that the only one of these business structures get tested on it that has retained earnings is a corporation. And you would know that corporations would be good for raising, capital. If you're going to raise a lot of capital, C Corp's the way to go. S Corp, maximum 100 shareholders, all have to be, none of them can be aliens, right? What am I missing? One, sole proprietorships. So you're definitely going to get some questions there. Under Uniform Securities Act, a surety bond. So a surety bond is to protect the firm, from its employees in terms of theft, or I should say the clients. And so they're asking about the surety bond. So under the Uniform Securities Act, which of the following statements regarding the posting of a surety bond is not true? So they're asking which of the following is not true. The administrator requires posting of bonds primarily to cover the cost of civil liabilities associated with violations of the Uniform Securities Act. Well, maybe I'm not sure of that. Bonds may be required for agents of broker-dealers. So they're asking what's not true. The administrator requires all broker-dealers to post bonds, even if they maintain net capital in excess of the minimum amounts. Now, that is a question. I don't like this particularly phraseology, but what we're trying to say here is there's 2 situations you should be aware of on your 66. That the state administrator cannot require broker-dealers to have higher net capital or net worth standards than what they're required to have by the SEC, and they can't impose upon a broker-dealer record retention rules or in excess of whatever those amounts are that are required by the SEC. So it's C. I don't like this particular question's phraseology, but that's the testable takeaway. Probable return. So it sounds like, we're saying, well, we can have the expectation based on some math of the probable return we're likely to get. So the probable return is best described as, it's not there, but that's what I think of. I had sometimes my own phraseology to help me answer the question. The current worth of future income discounted to reflect what the income is worth today. Now that would be discounted cash flow. B, the discount rate that equates the future value of the investment with its net present value. No. The difference between an investment's present value and its cost. No. Estimate of all possible returns an investment is expected to yield. Yeah. D. Under the Investment Advisor Act of 1940, it is legal for an investment advisor to rebate a commission to a mutual fund to a customer. Absolutely not. I have seen some of these reality shows where a real estate agent to close the deal will say, hey, I'll kick in my commission. No, you can't give concessions, discounts, and allowances to non-members. And so big no-no. So 1 is a big no-no. 2, it is legal. 2, to keep the commission on mutual fund when the client who purchased there is already paid for investment advice. Yeah, that's okay. It just needs to be disclosed, right? So if I'm acting as both an agent of the broker dealer and an investment advisor rep, I have to disclose, what hat I'm wearing when I'm doing the transaction. My advice to you is to buy a mutual fund, right? And was that including the wrap fee? Who knows? But that's perfectly okay. It just needs to be disclosed. Reduce a client's investment advisory fee by commissions earned on mutual fund sales to that client, and that too is legal. The big thing to take away from this question is you can't give concessions, discounts, and allowances to non-members. Under the Uniform Securities Act, an investment advisor may legally have custody of money or securities belonging to a customer. Now, remember, if you have custody, your minimum is going to be 35 grand on the state level, because remember, it's federal, it doesn't ever matter. And if you don't have custody, it's going to be 10. All right, so 1, if the administrator has not prohibited the practice, that's true. If the investment advisor has notified the administrator there's custody, that's true. I need 1 and 2, and I can't take 1 and 2 and take 3, so thank you very much. Only as long as the advisor does not also have discretionary authority. That's nothing. So it's 1 and 2. Efficient market hypothesis. You are going to get efficient market. You might even get 2 of these questions on the efficient market hypothesis. And remember, there's 3 forms of this. There's weak, there's semi-strong, and there's a strong. The one that shows up most often on the test is going to be the strong form. So, that nothing works. And then, the follow-up question would be, well, are we going to recommend something? Yes, and it would be an index fund. So it suggests that fundamental analysis and insider information may produce above market returns. I always, again, think of Warren Buffett here. The efficient market hypothesis says Mr. Buffett, no one, including Mr. Buffett, should be able to beat the market over the long term. And yet he does so. So if you believe in the weak form, you would say, okay, well, he's a statistical anomaly, and I believe in the weak form, so I believe that that's possible. So the weak form holds that current stock prices reflect all the historical data, and therefore there's no value in predicting future prices based on that. But this form also holds the weak form that credible fundamental analysis, like Mr. Buffett, and being in possession of material non-public information might work. And then that strong form, as I told you, is also known as a random walk, and that's the one I would expect on your exam. So, almost forgot to select it. An employer has a qualified retirement plan. So qualified means it's met the Department of Labor requirements to use pre-tax money to fund it. And so it has a 0 cost base to the employees. So everything coming out is going to be taxable. This one says they're going to pay their employees a percentage of their average salary. That's called a defined benefit pension plan. We're defining to the employees what their benefit will be, and the employer is assuming the investment risk. You should be able to contrast a defined benefit plan with a defined contribution plan. Defined contribution plan, the employee assumes the investment risk, and the employer defines what the contribution will be. An individual employed, I didn't wonder if I missed one. Nope. Okay. Every once in a while we get done, I've accidentally skipped one. An individual employed by or associated with an investment advisor that is registered under the Uniform Securities Act has a place of business in this state and is employed or associated with a federally covered advisor. So really be careful on this one. So if I am an investment advisor representative of a federally covered investment advisor, I can have thousands of customers in a state and not have to register as long as I do not have a place of business in the state. Once I have a place of business in the state, as a 65 of a federally covered investment advisor, I would have to register as an investment advisor rep in the state. Remember, the investment advisor, if they're federally covered, is never registering with state under any circumstance. They're only registering with the SEC. All right, let's see if this is what that question's about. Is employed by an associate with federal whose only role is to solicit, offer, negotiate. I think, right, I'm going to have to, if I'm soliciting and I'm federally covered, I'm still going to have to take them past the 65. So in this state, it was required to be registered, employed. So I'm employed. I'm not a third-party solicitor. I'm employed. I'm just going back to see who I'm working for. I actually work for Fisher Investments. I'm in a Dallas office in Texas, and I'm soliciting people to invest with Fisher. I'm just using Fisher because, they run a lot of television advertising, and, it's not endorsement. I'm just telling you, most people have seen them on CNBC, so they're a fee-based investment advisor. So no, if you're the 65 at Fisher, it's certainly federally covered. I think they got $400 billion or some crazy thing. So you're going to have to register as a solicitor. And remember, you're the person, you're the living, breathing human being. In general, a broker-dealer will disclose any changes in its fee schedule. Again, this is one of those aim and shoot point and click questions that we don't get very often on 66. So when we get these aim and shoot point and click questions, we better, be able to perform. So in general, a broker-dealer will disclose any changes to its fee schedule by notifying the clients of the change in advance. An owner of an annuitized annuity contract can do all the following. So when you annuitize, you're telling the insurance company that you want to turn this into an income stream that you can't outlive. That's kind of a nifty thing to be able to do. You certainly can't do that in a mutual fund. So that's kind of one of the nifty things about this. So can do all the following except receive benefits for life, absolutely, or period certain. So A is true, definitely shouldn't be struggling with A. Have a joint life with last survivor clause. Absolutely. We will pay you for the rest of your life, the insurance company says, and a survivor for the rest of their life. Absolutely. Receive benefits on a monthly basis until the time of death. Absolutely. Receive monthly payments for a defined period and then 2 years change. No, once you annuitize, that's it. That's it. I don't really think I would take away from this D as the except, but I would definitely want to know A, B, and C are certainly true. Certainly true. It is a violation of the Uniform Securities Act if an agent makes a material representation. No, be careful, boy, John Reed. A would have been a problem if it said misrepresentation. It didn't say misrepresentation. It said I made the appropriate representation. So that's okay. Offers or sells any securities unless it's registered. Yeah, that sounds, is a violation. No, because, I'm just reading this. Remember, there's exempt transactions the way I sell it. So this could be a private placement, for example. Fire a fraudulent application. There we go. Ding, 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 ding. Splits commissions with another agent in the office and fails to close out. You don't have to disclose how we split commissions. You have to disclose commissions, but, backstage how we split that up on the team is, not something that's material, needs to be disclosed. An investor begins contributing 600 on the third day of each month. I would definitely project the right answer here is dollar cost averaging. To make dollar cost averaging, we're going to need fixed dollars invested regularly. And then we're going to end up with a lower average cost, and those are the underlying shares. And then I can't guarantee a profit. All that's very testable. So what I'm going to do here is I'm going to take my $600 divided by 10, $600 divided by 12, $600 divided by 15, $600 divided by 20, $600 divided by 12, and $600 divided by 8 to figure out how many shares I have. Then I'm going to total up those shares. And then I'm going to take 6 times 600, 3,600. I'm going to divide by the number of shares, and I'll get my average cost. As I said, to finish this on time, I'm just going to guess B, assign it to the universe, and then maybe I'll go back. Tell me in the comments if you want me to go back in the video description. I always timestamp the videos, but if you want in the timestamp for me to actually show you the math, I'm more than happy to do so. Which of the following expressions describes the current yield of a bond? Very testable. Current yield is always what an investment pays you divided by what it costs you. So what it pays you is the annual interest divided by the current market price, D. Julietta, a math teacher in the local high school, owns a qualified tax-deferred annuity. I would definitely know that employees of educational institutions, 403Bs, and employees of nonprofits, 501Cs. There's my timer. So this has now been an hour. That's our second 30-minute segment. And employees of 501c's, nonprofits, can get what's called a tax-sheltered annuity. And the point about having a tax-sheltered annuity, so first question is who qualifies? And remember, that means you're using pre-tax money. So that means you have a zero cost basis. Everything coming out is going to be taxable. So let's see. Her annuity payments are all taxable as ordinary income. Yeah, I like that question. Now, if this was just a variable annuity, right? If this was a variable annuity, she wasn't a math teacher who qualified for the tax shelter annuity, then it would have been B, right? So be careful. So the reason this is a A and not B is because she's a math teacher and she has the qualified version. Which of the following statements regarding investment advisor use of a full server broker for an account where the advisor has investment discretion? So I used to use this in my practice. My investment advisory firm was called Gamma Global Investment Advisors. And we use Schwab Institutional Group for execution and custody of our customers' funds. And I said, listen, I can't steal what I don't touch here at Gamma Global. We don't have your money. Schwab does. Schwab is, I thought that was kind of a co-branding situation. I mean, you may worry about Gamma Global Investment Advisors, but I don't think you would be concerned about Schwab. Okay, so a full service broker may be used if the charge is reasonable in relation to the advice and the other services provided. Sounds pretty good. I used to tell my clients that, Schwab is going to be charging commissions. I'm going to call Schwab and buy and sell securities in your portfolio. And listen, when I do so, Schwab is going to charge you a commission. They're not the cheapest, but, they have branch offices and they have 24-hour customer service. So, I think that's a pretty good trade-off. I think that's pretty reasonable. There's some firms that, after 8 o'clock, nobody's there to answer any questions. So that sounds good. A full service may be used only if the broker is not affiliated. No. Sales incentives may be taken into consideration. No, I'm not supposed to, be making decisions based on incentives or inducements from a broker dealer. By the way, be careful. We do have what are called soft dollars. I don't know if we'll see that, but that's a different deal. A full service broker may not be used. No. Okay. An investment advisor must meet net worth. Remember, for the state administrators. So net worth is the 10 or 35 grand, depending on whether you have custody or not, based on the risk you present to your clientele. This is kind of crazy. I think sometimes people, are confusing Kaplan practice questions with the actual exam, but I have had people tell me they've had this SOFA question. So I don't know if it's just because they are Kaplan students and they've seen it in the practice and it registers, or whether, Kaplan, based on debrief, has come up with a question with a SOFA in it, but for whatever it's worth. Let's see. So an investment advisor must meet the net worth requirements. When doing so, which of the following assets would be included? So they're asking me for something tangible. So a sofa in the reception area is an asset. Now I would question, on the balance sheet, that's where it's going to show up, right? I'm going to provide the administrator the balance sheet. So yes, that's an asset. Let's see. So one, it's either A or D now, based on what I just said. The value of a copyright in an investment manual authored by the investment advisor. Now, we're not going to let you count intangibles. Intangible would be, like that. The reputation, goodwill is an intangible. Patents are an intangible. So, we want solid stuff. One only. I don't know. I don't know if I'm going to call that stupid but testable, but I have had reports of the SOFA question. Which of the following hedge funds characteristics is least accurate? So I think this is the second time we've had a hedge fund question, right? So they require large entry investment amounts. That's true. They're heavily regulated. Absolutely not. The whole point of having a hedge fund is so I don't have to comply with the regulatory framework of other things like mutual funds. So I'll do all kinds of crazy stuff because they're not managing public money. So, boom. They can borrow and use derivatives. Yep. Yeah, and they're trying to get absolute returns, and that's true too. Under the Uniform Securities Act, which of the following persons, now remember on your test, persons doesn't necessarily mean living, breathing human beings. We have two versions of persons on the test. That's a legal term, right? And corporations are people too. They're unnatural persons. They have rights too. So which of the following has to register as an investment advisor? A broker dealer who gives advice and charges a specific fee. Yeah. I think that meets the ABC test, right? ABC. I give investment advice. I tell people I'm in the business of giving investment advice. I want compensation. There's no circumstance in which the agent is going to register as an investment advisor. So you just toss that out from the get-go. Broker dealers who give incidental, no, that's just the traditional broker where I say my advice to you is free. Sometimes my advice is you buy or sell an investment, and then I get a commission markup or markdown. That's not an investment advisor. An attorney writes, no. Hey. Jackie Jackson is an agent of Hamilton Securities broker dealer. So she has her 7, and the broker dealer is registered with the SEC. I can't imagine there be any circumstance when that is not true, but oh well. Let's see if it's meaningful to answering the question. Jackie's father, Andy, started a startup venture several years ago, and the company with Andy as CEO had an IPO 4 months ago. For Jackie to recommend the shares of the company, I think she's going to have to disclose. So I'm projecting the right answer being disclosure of some sort. And yeah. So let's see. Obtain written consent. No. Apply stricter. No. Disclosure. D. You have to disclose the potential conflict of interest. Your investor buys 300 shares of RIF common stock at $25. So that's the cost basis. Cost basis is simply when you turn the money into the investment. 3 months later, you purchase 200 more shares of REF at $30. So your cost basis there is $30. 1 month later, REF pays a dividend of $1 per share. And then 5 months later, another purchase is made, this time 400 shares at $35. If the client were to sell all of the REF at $30 a share, what is the capital gain or loss? So the annual dividend has nothing to do with this, right? So that's just there to mess me up. I would take the 300 shares times 25, the 200 shares times 30, the 400 shares times 35, and whatever that total is, right? And then I sell it all at 30, and then I would just see what the gain or loss is. As I said, I'm going to just guess B on these because I'm trying to bring this in a timely fashion. And you can tell me in the comment box if you'd like me to show you the math. Susie McQueen has a very successful interior design shop. She has run as a sole proprietorship. These questions are testable about business structure. She's just celebrated her 60th birthday and has been giving thought to the eventual sale of the business. She wants your opinion on whether she should incorporate or change to a partnership. You would respond, well, boy, projecting the correct answer. I think I'm not an attorney. So, I might have some general ideas here because, I have some expertise perhaps, but she wants my opinion. So I say A, the partnership form of business structure would enable Susie to maximize her sale price. No, it's kind of convoluted trying to sell, partnership interests. All right, because in a partnership, you need permission of the GP to get in or out. So even if she's the sole partner in the partnership, that's going to be a problem. The corporate form of ownership would be the easiest for ultimate transfer of ownership. Yeah, I don't particularly like this question, but you should know that corporations have a freely transferable interest. That's what this question is getting at, and partnerships do not. So, I don't particularly like the phraseology, but I'm going to go for B, I think. The partnership form of business would be the easiest. No, we just talked about why that's not true, right? Partnerships, you can't get in or out without GP permission. They're not liquid. That's very testable. No, the partnerships are not liquid. The corporate form is least expensive. No, forming C Corps is expensive. You got to go get an attorney. In fact, I thought this was going to be a question about go see an attorney and get their advice. You were discussing features of qualified plans with a client. You state that one type of plan, the eventual amount will depend on the fund's performance. You must be referring to. Remember, this is getting at who is responsible or who has the investment risk, right? In a defined contribution, the employer assumes the investment risk, and you have no worries about investment returns because that has nothing to do with you. But if your ultimate payout from the pension plan is dependent on the fund's investment performance, well, then you, the employee, are assuming the investment risk, defined contribution. An account opened by two individuals with joint tenants with rights of survivorship, very testable. to be able to contrast joint tenants with rights or survivorship with tenants in common. Stock certificates can be delivered in the name of either party. No, that's not true. All the following are true. So right out of the gate, that seems not true. However, the title of the account is, that's how certificates must, be made negotiable, and that's how checks get cut. So very testable. Boom. Orders may be entered by either party. Yep. In the event of death, the party assumes full ownership. That's definitely true and very testable. Mail can be directed to the joint owner, agreed by both parties. Yeah. So given this answer set, what's not true is stock certificates or checks can be delivered in the name of either party. Now, how the account reads is how stocks are made negotiable. Both signatures is what that means, or checks are cut. The beneficial owner of the UTMA account is the minor. Very testable. The kid's tax ID number goes on there. One minor, one custodian, very testable. You can stipulate up to the age of 25. And I would know no margin. Again, very testable. Very testable. FinCEN, the currency transaction report. So anti-money laundering. You're going to get a couple anti-money laundering questions. And this is the Department of Treasury. It's called FinCEN. So it goes to the Department of Treasury. You don't get many aim and shoot point and click questions. So when you do, you got to be able to perform on them. The owner of a fixed annuity is protected against inflation risk. Absolutely not. Right? Variable annuity has some protection against that, but not a fixed annuity. Longevity risk. Yeah, you can't outlive this payment. Purchasing power risk, A and C are the same thing. Loss of money due to early death. No, so, you annuitize and you die next week. I mean, then the insurance company is going to make out. That's called the law of large numbers or averages. I'm going to go with longevity risk. Let's see if I get that right. I think that what we're saying here is that this is a neat thing that you can't outlive the income stream. I kind of like this. It's ultimately supply and demand. But remember, over-the-counter is a negotiated quote-driven market, whereas the New York Stock Exchange is an auction order-driven market. So that's what they're getting at in this question. Again, I don't like the phraseology in the question, but I do like the intellectual takeaway that the two styles of market centers is New York Stock Exchange, auction order-driven, where they match buyers and sellers, and NASDAQ, for example, National Association of Securities Dealers Automated Quotation System, where there's a bid and an ask. So D. Which of the following statements regarding the Investment Advisor Act of 1940 and the Advisor Brochure is true? Each client must receive the brochure no later than entry into the advisory contract. Yeah, I like that. Annual delivery of the summary of material changes. No, B is, you should never come up with an answer that says like B, where we're relieved of some obligation. Each client must receive the brochure no later than 48 hours after entering the contract. No, the 48 hours, once again, is the idea that if I show up and I haven't given you the brochure 48 hours prior to me showing up, then you're going to get a 5-day free look. So see, they keep trying to bait us on, what's that 48 hours thing in 5 days? That's a different deal entirely. Advisors must deliver the brochure for whom they offer impersonal advisory services only when he does not reach 500. No, that's, remember, an exemption available. So it's A. Yeah, so here the financial ratio always means division. So if you can't decide what to do, divide. So the financial ratio that shows, by the way, if you can't decide what to divide, take the first number divided by the second number. The financial ratio that shows the relationship between the price of the company's stock and the company's net worth, equity, is known as. Well, there's nothing, I'm going to use process of elimination here. What I mean by process of elimination is there's some of these that I actually know what the inputs are, and then I'm going to go through the question and see if I can find the inputs. So the price to earnings, there's nothing in this question about the earnings. So I can get rid of that. There's no such thing as the dividend discount ratio. There's the dividend discount model, so process elimination, that ain't it. Price to sales, there's nothing in this question about sales, so it must be price to book, right? The book value is the theoretical liquidation value of the corporation, and it wouldn't include the intangibles. I would know this is an answer set: A, par value; B, market value; C, book value. A, par value, $100 arbitrary, $100 for preferred, 1,000 for bonds. I definitely know par value. Used to set up the books. For stock, it's a buck, but who cares? Common stock. I would know market value, supply and demand relationship in the secondary market, and I would know book value, theoretical liquidation value. Under the Investment Advisor Act of 1940, remember we have a ABC test. Do we give investment advice? Do we tell people we're in the business of giving investment advice? And do we want compensation? A syndicate columnist who gives weekly reports and recommendations on investments. No, the Wall Street Journal does this every day. Not a problem. They have some good columns there. A person who publishes a regular newsletter on advice on U.S. Treasury and government securities. No. A lawyer who specializes in consulting on investing in securities. Yeah, boy, this isn't incidental. Remember that lawyer, accountant, teacher, engineer, late it's incidental. This doesn't sound incidental to me. I can't tell you how many attorneys show up in a 65 class because they have to become investment advisors because they're no longer giving investment. I would think here like distressed securities. You hire me as a lawyer and I look through the corporate structure and say whether you should buy the secured bonds perhaps or the preferred stock perhaps based on the corporate liquidation. Mary bought 1,000 shares in the morning and sold 1,000 shares in the afternoon. Sounds like a day trader. Under the Uniform Securities Act 34, rules dealing with the regulation of manipulative and deceptive devices. Well, I think this is going to sound pretty harsh to say she's violating. She might be a day trader, but let's see what our choices are. There's nothing so far that makes me think that she's, done something wrong here. She has violated the act if a profit was made. Sounds kind of harsh. Her broker has violated the act. No. She has violated the act only if she was trying to create market activity. Yeah, giving the false impression of volume is a big no-no. It's called painting the tape. One of the test-taking tricks, don't use test-taking tricks unless all else fails, but I also like it because it's too long to be wrong. Too long to be wrong. Whoever wrote this question spent a lot of time on that choice. Under the Uniform Securities Act, all the following are required to be registered as an investment advisor representative. So this is you. So they're asking somebody who doesn't need to do what you're doing. An employee who solicits new customers. So I think, boy, if you're soliciting new customers, I think most of you are going to be doing that, right? And that certainly would require you, to be registered as an investment advisor rep. A vice president who serves on the firm's advisory committee, yeah. An individual who furnishes investment advice, yeah. D, I like D. A, B, and C are all natural persons, living, breathing human beings. And to be an investment advisor representative, you have to be a natural person, a living, breathing human being walking planet Earth. ABD Advisors is not a natural person, not a living, breathing human being walking planet Earth, unnatural person. And there's no circumstance in which they would, this entity could take a test, right? How does a corporation incorporate? How does a corporation take a test? So D. Which of the following transactions are prohibited? Which of the following transactions are prohibited? Borrowing money from a customer. You should definitely know that borrowing money from a customer, regardless of their net worth or not, is prohibited. I say, oh, you're so rich and I'm so poor. No, that's prohibited. So one is prohibited. Selling speculative hot issues to a retired couple of modest means. That sounds speculative. Failing to follow a customer's instructions and a security not adequately covered by well-known. No, if your customer tells you to do something stupid, you still got to do it. You document it. Backdating confirmations. No. To create a long-term capital gain. No. So 1, 2, 3, and 4 are all prohibited practices. The NASA model, the North American Securities Administration model of custody requirements requires investment advisors with custody of clients' funds do all the following except. So which of these things should we not do? Which of these things should we not do? Deposit funds into a client account and provide written notice. Absolutely, we should do that. Submit to an annual surprise audit. Yep. C, send monthly statements. No, statements aren't monthly. Statements are quarterly. So custody to all the following except. So we don't send monthly statements. We send quarterly statements. So C, we don't send monthly except. So let's see what D says. I want to read the full answer set just to see if we don't find something we like better. Submit an audited balance sheet to the administrator, Part 2A or Form ADV each year. No. So it's not monthly statements. It is quarterly statements. There are several measures of tendency, central tendency, used by investment analysts. Included would be all the following except. So again, here's another one where we're not asking you to do any math. We're just asking you, inputs or what the results are, right? So mean, yeah, right? I would be prepared to do a simple average, which, mean. The mode is the one that occurs most often, yes. So, we're talking about a set of numbers, the mean, the mode, the medium is the middle, and all those are part of a set of numbers. Moving averages are not. So I kind of like this. I don't, like the wrong answer. I just want you to know the right answer. I'd be prepared to do a simple average on the test. Each of the following is not a prohibited practice under the NASA. Each of the following is not a prohibited practice except. So again, Kaplan purposely tries to use bad grammar because that's what they've told us on the test. I'm not surprised there's bad grammar because the Uniform Securities Act template comes from the 1950s and it's not in English, it's in legalese, right? So anyway, so I always like to get comfortable when I'm being asked. I'm being asked here, all following is not a prohibited practice except. So one of these things is a prohibited practice. So, I think 66 is less challenging if you can figure out what you're being asked. But I would be the first to stipulate that it can be difficult to figure out what you're being asked, right? So let's look at our choices here. A broker-dealer failing to disclose the firm is affiliated with the issuer of the recommended security. I always think here, Merrill Lynch and Bank of America. So Merrill Lynch fails to disclose that Merrill Lynch is an affiliate of Bank of America, the recommended security. Absolutely. Right, that's called a control relationship, and that needs to be disclosed. So if you're a Merrill broker and you get somebody involved in Bank of America, that will be disclosed on the confirm that there's a control relationship. A broker-dealer obtaining a mortgage for its new building from a bank that's a client? Nope. Broker-dealer charging higher than normal on a trade involving a thinly traded stock? Nope. A broker-dealer placing an order in a customer's account received from the authorized third party? Nope. It's failure to disclose a control relationship. Mr. Beal buys 10M, that's 10 bonds. The coupon is 6.6. So that's 6.6% on 1,000. They mature in 2010, or I guess 3010. This looks like this question is out of date, at $670. So, and it wants to know what is the annual interest. So I'm going to take par 1,000 times 6.6%. And we find out that that's going to be $660. Sharon Smith is an agent for High Water Securities, a broker-dealer registered in all 50 states. Wow. Sharon receives an unsolicited order from a bank located in state X, a state in which she has no place of business, under Uniform Securities Act. Now, be careful. There's no circumstance in which Sharon is not going to have to be registered. This question isn't about an exempt transaction or an exempt security. It's about Sharon, right? So we got to stay focused on who this question is about. This question is about Sharon. So because High Water Securities is registered in all 50 states, Sharon must also be registered in all 50 states. Now, there are lots of broker-dealers registered in 50 states that don't have every rep registered in those same states. I was teaching a class at on the Schwab campus, and the guy was telling how he gets all this call from the same lady, like they have graveyard shifts at 2 a.m. every night. I thought, well, gee, how does that keep coming to you? And he was saying that it's a Wyoming call, and so on the graveyard shift, he's the only guy in Wyoming. Why would Schwab want to license 50,000 people when there's 3 calls a night coming in? So he gets all I think it was Wyoming or some state like that. Oh, so there you go, right? So not every Schwab person can pick up the phone and answer any Schwab customer's inquiry. They tell me at Schwab, I don't know if it's true or not, but the calls are routed. They know where the calls are coming from, and they get routed to the agents that are properly registered, which makes sense. B, because Sharon has no place of business in state X and the client's an institution, she can accept the order without registering in state X. Again, this is not a question about the institutional nature of the customer. It's about, Sharon, right? Because Sharon has no place of business. No place of business is about investment advisors or the type of client. And it's not about Sharon. It's about the broker dealer, right? That no place of business. Yeah, she's got to be registered. So this one's kind of tricky. Be careful. It doesn't matter what kind of transaction it is. The agent or the broker dealer needs to be properly registered in the state. Passive real estate would include all the following except. So passive. So 3 of these things are passive and 1 of them is not passive. 1 of them seems to be active would be the way I would classify this question as a test taker. Renting out single-family homes. Boom. Boy, if that's what you're doing, that sounds like you're actively engaged in the business. Why would you want to do that when you could buy a REIT, a real estate investment trust? That would be a lot easier way to be in the real estate asset allocation mode. If you're making an asset allocation of real estate, don't want to be actively involved. B is a good solution. C is a good solution, and a partnership. So yeah, A is active involvement. Which of the following statements regarding use of a hedge clause by an investment advisor is true? You do get tested on hedge clauses. So I can't use a hedge clause like I may be ripping you off, but you agree by signing this contract, you won't hold me legally accountable. No, right? So a hedge clause that limits liabilities to acts done in bad faith or pursuant to willful misconduct, but also explicitly provides the rights under the state and federal law cannot be relinquished, would generally be acceptable to the administrator. No, I just told you that there's no legalese you're going to come up with that would be appropriate, right, for the estate administrator. So which of the following statements regarding a hedge clause by an investment advisor is correct? The investment advisor must, no, the hedge clauses are bad. Hedge clauses are bad. A hedge clause that limits the investment advisor's liability for losses caused by conditions and events beyond its control, such as war, strikes, natural disasters, would be acceptable. So A is not acceptable. B is not acceptable. C sounds reasonable. A properly worded hedge clause may be used to minimize no. You will get a question on this. I don't like this particular question phraseology, but you should know that you can't use hedge clauses to get rid of any things we're talking about under the Uniform Securities Act. And, illegal contracts can't be enforced. So the investment advisor wouldn't be able to enforce A even if they wanted to. According to the Uniform Securities Act, all the following would be defined as an investment advisor rep, except, so we're asking about you, right? And they're asking about who doesn't need to, go do what you're doing to become an investment advisor rep. Who doesn't have to do it? John, who opens an investment advisory firm where he devotes his time exclusively to management responsibilities as the sole proprietor of the firm. Well, that does indeed sound, which of the following would be defined as an investment advisor? So he has the firm, but he's also the person representing the firm. So he would have to be, he would be defined as investment advisor representative. I mean, John's going to have to go take a test. Paul, who works for the firm soliciting investment management on behalf of several different investment managers, have to be registered. Margaret, who works as commission. No, that's just a 6 or 7. And if that's all they want to do and not charge fees, then they, or gets work for a firm that charges fees, they don't need to, be an investment advisor rep. So 1, 2, 3, 4, mark and employ of a AAA broker dealer, solicit brokerage clients for commissions on a basis of research. No, so it's 1 and 2. That's now, we're in 90 minutes. We're in 90 minutes. Ooh, so these things are long, but again, you can hit pause and come back to it. 1 and 2 are going to have to be investment advisor representatives. Which of the following pieces of customer information must an agent attempt to obtain when opening a new account? So we are definitely should have been able to get rid of education, right? I mean, there's nothing that's mandatory about. I mean, I might want to ask that, but that's not any kind of regulatory requirement. I've known some very, very sophisticated people who, only went through high school, particularly in the Midwest, soybean farmers, people like that. Emergency contact person, no, but your financial condition and your investment objectives, certainly 2 and 3. Right. So for me to do a really good job for you over time, I need a lot of information. What I like to do as of today, set up a balance sheet, go over your assets, go over your liabilities, establish your net worth. And, we can revisit this and hopefully we'll be able to increase that net worth. The major risk, well, the 2 risks in bonds are credit risk and interest rate risk. And if it's AAA, Johnson & Johnson's AAA, Microsoft is AAA. Those are the only 2 AAA corporate bond issuers. And so if you invest in a Johnson & Johnson bond or a Microsoft bond, stock market volatility, no. Liquidity, no. Interest rates, right? That's a systemic or systematic risk. I don't care what bond you have. If interest rates go up, the bond goes down. Tax law changes, no. Oh my God. I don't know what we want to do on this one. You know what I'm hoping you're operating from abundance. You're operating from abundance. And then when you bump into a question like this, you can just, say, I'm just going to give myself permission on a question like this to guess B and assign it to the universe. So I'm going to guess B here, not because it's math, just because I'm trying to bring this in a timely fashion. And if you're, in the high 70 range, low 80 range on your practice exams, then you will feel free to give yourself permission, as we've been doing in this exam, to guess B, assign it to the universe, and move on. If you're in the low, 70s or below 70, you're a risk and you can't be doing that. I don't want you. I'd rather you be operating from abundance rather than scarcity. So we'll see. Like I said, I'm practicing what I preach here. And on some questions, math, where I don't feel inclined to do the math because I'm trying to get this done in a timely fashion, as well as demonstrate to you that even if you don't do the math, you're still pretty good shape. And then secondly, when it's a question like that. Anyways, we definitely should be able to contrast closed-end funds with investment open-end funds. 3 and 4 are management investment companies. 1 and 2 are not. I can't stress to you how many mutual fund questions you're going to get. So sometimes people on the 7 go, what can they ask me about a mutual fund? I don't know, because I just did that on my 7. Make sure you review the difference between open-end and closed-end funds, open-end funds and ETFs and versus ETNs. Very testable. Unit investment trust, students, test takers always asking about, but unit investment trusts are professionally selective and passively managed. Face amount certificates are legal in most states, but UITs is more of a test prep vendor tormenting you than the actual test, but the others are very testable. James Stillman is an investment advisor rep with Rockefeller and Standard, a covered advisor. So that means, again, his firm is registered with the SEC. So he's going to register in state O because as 66, as investment advisor rep, you're going to register at least the state in which you're federally covered. Remember, your federal covered advisor isn't registering in any state, but you, the investment advisor, will be registered in state O. Stillman works out of an office in state B. So if I'm a federally covered investment advisor rep and I have a place of business in state B, Stillman, is going to have to register in state B. Has 4 retail clients there. By the way, it doesn't matter how many clients you have for your federal cover. The de minimis has nothing to do with federally covered investment advisors and investment advisor reps of federally covered investment advisors. It's because he's working out of an office in state B, as in Paul. In addition, Stillman has 25 retail clients in state D. Who cares? Unless he has a place of business, it doesn't matter. 6 retail clients in state M. Who cares? Unless he has a, place of business. And 1 retail client in state O. Now, remember, state O, he was registered in because the principal office was there. So you need to be registered in state O and state P. And I'm just reviewing this again. And I'm going to say P and O because he's federally covered. Now, remember, if this is a state advisor, then that answer is going to be a lot potentially different, right? So all that de minimis stuff is based on whether you're, state. The de minimis is only for state covered investment advisors and investment advisor representatives of the state. So let's see. Stillman works out of an office. We might miss this. I'm going to say I'm going to count the office as a location. Let's see how we do. Might miss that one. If a non-exempt company has authorized a stock split that will give each shareholders 2 shares for every 1 share without charge, this action, you remember that's not considered an offer or sale under the jurisdiction of the state administrator. So it's need to be registered because it's neither an offer to sell solicitation, excuse me, a solicitation to buy. A customer portfolio has a beta coefficient of 1. So we would expect this to be 1.1 times more volatile than the market. So if the market goes up 10, we would expect this to go up by 0.1 more. Boom. Yeah, by the way, B would have been if it had a beta of 1. So I'm not even doing the math. I just know that that's going to be the excess of that. Now, remember, if it went up more than that, that would be the alpha. The alpha would be the excess over the beta. So, by the way, this is just a point blank question. They're not going to make you calculate it. They're going to say a measurement of a stock or fund's volatility as compared to the market as a whole is known as, you got to come beta. The return in excess of beta is known as alpha. You got to come up with alpha. That can be positive or negative. A highly compensated customer owns 200 shares of DataWhack. He bought it 20 years ago. It's now trading at 90. And he donates the stock to a 501c charity. How much can he claim as a deduction? So this is kind of nifty. This is giving him an incentive to make these kind of donations, right? So you get a donation based on the current market value. So the current market value is 200 shares times 90. It's 18 grand. Now, the other one I'd be prepared for is somebody who dies where there's a step up in the cost base, right? And then a gift. So in a gift, not to a charitable organization, but if this was a gift to like my nephew, my nephew would assume my cost base. And if it's I die and my nephew inherits the stock, it'd be a step up, it'd be market value at death, decedent death. When a client is investing in commodities, you would expect to discuss. It looks like they're soybeans, wheat, and corn are agricultural commodities. Remember, commodities are not securities. An investor reading the open-end investment company section of the Wall Street Journal sees that Bull and the T-Shop Fund has an NAV 1065 and the offering price 1115. He knows they would have received which of the following has been received by the fund prior to yesterday's market close. We're always doing business based on the next calculation of the NAV forward pricing. So they're backdating the question. So they have to get into that. You should definitely know that you're going to pay the high price and you're going to get the low price. I don't see anything in here about a redemption fee. So, but we shouldn't have been struggling that it's going to be the NAV. And if they have a redemption fee, we're going to have to pay that as well. So we need 1065. So it's either going to be B. There's no commission. Commission means secondary market. And all open-end funds are trading in the primary market. You're doing business directly with the fund. So I'm now able to eliminate choice B because there isn't a commission. Commissions are secondary trades where the broker-dealer acts in its agency capacity. So it's going to be D. An investor concerned about preservation of capital would be most apt to purchase common stock, call options, warrants, investment-grade corporate bonds. It's going to be corporate bonds. Investment grade, I would definitely know, is triple B or higher under Standard & Poor's. So triple B is investment grade. Less than triple B is less than investment grade. Has earnings of 4 and a dividend of 50 cents. The current yield is what it pays you divided by what it costs you. So what it's going to pay me is 50 cents quarterly, which is $2 annually. And if I pay 40 to get that, that's going to be 5%. I definitely would be able to calculate current yield on your exam. A current yield I'd be able to do tax-free and tax equivalent yields as well. The Seeking Alpha Growth Fund directs a sizable portion of its portfolio executions to your broker-dealer. Woohoo! If the firm has this funds on its highly recommended list, this would be. So projecting the correct answer, I think it's going to be a disclosure issue, right? No wonder we like the fund because they do a lot of business with us. So I'm looking for disclosure. Allowed only if the investment company uses more than one broker-dealer? No. Allowed without restriction? No, I'm looking for something so that I should disclose this. A conflict of interest that would have to be disclosed, absolutely. All the following statements regarding technical analysis are correct, except I would expect 1 or 2 questions about technical analysis. I know support and resistance. I know a head and shoulder charting pattern. I know a sell stop below the support line, a buy stop above. A is true. Technical analysts refer to charts to predict future prices. That's true. Technical analysts, by the way, maybe they're going to give me, I'm going to have to eliminate future prices. I'd like it. It says we could be wrong, but anyways, technical tend to predict the future movement based on past trends. That's true. Technical analysts use terms such as trend line, support, and resistance. That's true. Financial ratio. No, financial ratios, current ratio, asset test, debt to total capital. That would be fundamental analysis. So D. The document that gives the administrator the right to process complaints, that's very much a test question. That's called consent to service, is known as consent to service. All the following actions by an agent would constitute fraud as defined by the Uniform Securities Act, except. Executing a trade not constitute fraud. Which of the following would not constitute fraud? A, executing a trade and customer at a price that's unrelated to the current market value. That is fraud. Purchasing a security on exchange and simultaneously selling it on another change to increase, create the impression of increased trading volume. Yes. Giving the false impression of volume is fraudulent. Executing a trade for a customer without the customer's knowledge. Well, that's not fraudulent if I have trading authorization. So, it says execute a trade for the customer without the customer's knowledge. Don't bring extra stuff in here. So I'm looking for if there's anything discretion. There's not. So let's see if D is going to help me out. So far, A is a problem, B is a problem, and C I'm kind of wobbly on. D, purchasing a security for the account of a client and then buying 100 shares for your own account, that would be, again, something I think would be not fraud, probably disclosure. That, yeah, I like it. I eat my own cooking. Yeah, so I'm going to say D. A client is risk adverse and is planning on retiring in 16 years. As the client's investment advisor, which of the following would you recommend? I miss these all the time. As I told you, these are judgment questions, and I'm very prejudicial because I think you should be fully equitized. So the way I go through these suitability judgment questions is I try and use process of elimination. And so the risk adverse, I can toss out the small cap fund. I can toss out the high yield bond fund. And this is how we always end up in these kind of suitability questions. I'm joking, but with the 50-50. So my remaining choices are a government bond fund and 50% in an index fund and 50% in high quality bonds. Let's go back. A client is risk averse, 16-year time horizon. I may miss this, but I'm going to go, I think the government bond fund is too risk adverse, particularly when we're trying to get somewhere in 16 years so we can retire and have enough money working for us so we don't need to work for our money. So I'm going to go for D. I might miss that. I usually miss by being more aggressive. Again, your teeter-totter, remember this. A is a bond at par. B is a bond at a discount. Boom. 10% coupon yielding 9. So that's a bond at a premium. and bond D is a premium. So the only way you can have a yield to maturity higher than the coupon is if it's a bond at a discount. As used in regulations, the term impersonal investment advice. Again, I think of those like newsletters that tell you how to save money, by buying a no-load mutual fund, for example, things like that. Investment advisory services strictly by subscription. The subscription, that's not what determines impersonal investment advice. Investment advisory services provided by a team of advisors. No. Investment advisory services provided where the client does not know the identity of the investment advisor rep. No. D, investment advisory service provided by means of written material or oral statements do not purport to meet the objectives or needs of specific individuals. So, yeah. So that's why, for example, I say Dean Tenney's prudent speculator. And I charge you $1,000 a year for that. I'm an investment advisor, but I'm giving impersonal investment advice because I don't know who gets my newsletter. I'm telling you what everybody should do. By the way, that's also the exception to making a blanket recommendation. Which volume has the least exposure? Very testable, common stock. And I would also know tips keep pace with inflation. Don't beat that, but keep pace. $250 a month, I would definitely know dollar cost averaging. I don't like she's in a commodity fund, but that's not has nothing to do with it. That's kind of clouding my mind. But we said very testable dollar cost averaging. What makes it work is fixed dollars invested regularly. What's the end result? Lower average cost than the underlying shares, and doesn't guarantee a profit. 20-year-old client in the lowest tax bracket seeks an aggressive long-term investment. If his investment advisor recommends a high-rated GO bond, the investment advisor has recommended a suitable investment. No, right? So, by the way, they test more often on recognizing something clearly unsuitable. And I would think it'd be more testable to know what would be that this is clearly unsuitable and ask you to recognize it as such in the answer set. Committed no violation? No. Made an unsuitable recommendation made up being made based on the client's needs and objectives. Yeah. And that's kind of a gimme. That's about as close to a gimme as I think you're going to get. Money in UTMA may be used to pay for certain expenses related to the minor. Which of the following would be permitted? Wouldn't worry about this at all, but I would certainly worry about all those other things I told you. One minor, one custodian per account, tax ID number is that of the kid, no margin, definitely know that. One of these things is not like the other, right? So which of the following would be permitted usage in the thing? What they're trying to get at here is that you're not supposed to be using it for basic necessities. I think this is a stupid question. I think none of these is really what you should be doing. You should be making investments, but we'll see if I get that one right. If a client holds a convertible preferred stock, believes the company may go bankrupt within the next 3 years, what would you advise the client to do with the stock? Sell the security, buy puts on the common stock as a hedge, immediately convert to the common because the preferreds may no longer be paid, sell calls on the preferred stock. Well, again, you can get rid of that. We don't have calls and puts on preferred stock. I think this one's kind of another stupid one, but you get stupid questions on your exam, right? I think the most common sense thing is let's go home, man. Let's just sell it. Why would we want to compound this problem? I would just say, listen, it's a weed and let's just pull it. Let's just get it out of your portfolio. An investor wants to moderate overall portfolio risk and return profile with assets that have a low correlation to traditional asset classes. This is very testable. They're going to ask you for things that have negative correlation. Negative correlation. And so, you're trying to, under modern portfolio theory, get additional diversification through having assets that have negative correlations. And, private equity guys pound the table on this one all day long with pension plans. Say, why don't you make an asset allocation to our private equity fund because it has a different correlation than traditional asset classes. Traditional T-bills are traditional, corporate bonds are traditional, small cap are traditional. So the phraseology might be this difficult, but a person not registered in a state knowingly makes a misleading filing with the administrator, that person may be. So this is asking about criminal penalties on the Uniform Securities Act. Remember what that means? That means you could go to jail. So they're both civil and they are criminal. So here I'm just seeing imprisonment. No, it's not imprisonment for 5 years. It's the fine of 5,000. Prison is 3. So I don't have the prison of 3. I can get rid of A. So it looks like it's going to be D. Remember, it's 5 years imprisonment or 3 years in prison or both. I wouldn't know that, by the way. John and his sister Alice open a margin account as joint tenants with rights for survivorship. He puts in 50, she puts in 25, doesn't matter, because remember, there is no fractional interest. Both of them own 100% of that account. Don't bring into community property or estate, right? Anyways, they've agreed that Alice will trade the account. They'll share on the profits, losses based on, equally. As their agent, you would gather information regarding suitability for both of them, right? Because, they're both owners of the account. Under Uniform Securities Act, which of the following agents are in violation of the act? An agent persuades a client to co-sign for a loan and does not disclose he's facing financial difficulties. Sounds like a problem. An agent's customer instructs her to buy shares in ABC Pharmaceuticals. ABC, you don't do it. It's the agent buys. No, you got to follow your customer's instructions. That's very testable. So 2 is a problem. An agent purchases shares of a new issue and hopes to cause the price to rise by recommending all the clients purchase the stock after she does. That's called front running. So 1, 2, and 3 are all violations. All right, let's see how we did. All right, let's see what we missed. Now, remember on the math questions, I assigned B and put B and assigned it to the universe. Wow, maybe all my B's were correct. All right, so let's see. An investor begins, okay, so I said B, that didn't work, but here's the math. And the math is basically what I told you we would do if we wanted to do the math. And you should definitely know dollar cost averaging, right? So there's the math. You can screenshot the math you would like, or if you'd like, let me know and I'll put this description into the video description for you. Okay, so that was our first B. And that did not get us, sometimes if I lose it, I just hit end. So that was 36. All right, let's see what we missed here. Yeah, I thought I might miss that one. Because it says works out of an office in state P. And, I'm not sure about that. So let's see how I missed it. Stillman is required to register his clients. The question tells us a place of business. Please note, he doesn't maintain a place of business. There's no numerical. Yeah, so basically they're saying that office in state O was not his principal place of business. Works out of an office in state B. I don't like my miss there. I would probably protest this. Maybe I'll send a little email to my friend Chuck Lowenstein, is the guy at Kaplan who's in charge of questions, and say, I think that's a pretty poor question. You won't get something as complicated on that on the test. I'm sticking with my answer. I wouldn't change my answer there. Whoop. Okay, so let's see. That was that one. Ooh, got 2 misses here. Yeah, we guessed B on that one. So B didn't work as a strategy. But we were right. If we would have read, remember, we just chose not to even read this question. But the rationale, it tells us we could have used I wish we had more acronyms late and gone through the question and solved it that way. All right, what's our last one? I think I missed, what did we miss 4? Yeah, I think we just did that one. By the way, the QBank is pretty awesome. Remember, you can get the QBank from Kaplan. And it's pretty awesome because you can actually sort questions and do performance trackers. Oh, because it's not permitted to use for basics. Such, yeah, okay. So my rationale was right, but it was asking us the best one. So we take a vacation. I don't like this question either. No, that's like the real test, right? Nobody gets 100. Nobody gets 100. I think that was the last one I missed. Okay, well, I appreciate your patience. If you made it this far with me, kudos. Remember that inch by inch, Series 66 is a cinch. Yard by yard, Series 66 is hard. Let me know if you made it all the way through, because if so, then tell me in the comment box if you'd like me to do another one of these. I found that people love practice finals. It's one of the favorite things on the channel. So just let me know, and I'll see you next time. Bon chance, mes amis. That means good luck, my friends.